So bonds and treasuries got a bit of a bid today ahead of tomorrow's CPI number. Now, whispers are that CPI is going to come in pretty hot. Now, remember, my core thesis has been that this would actually come in as a small beat, right? We would actually be slowing down. It would be a continuation of the last print to show kind of peak inflation, and this would help give the Fed wiggle room to show that what they're doing is working. But whispers are that this is not the case. It's actually going to be a miss, and inflation is going to come in pretty hot. Now, if this is the case, you need to prepare for it. But before that, we're going to talk about uranium, right? So everybody's talking about this $4.3 billion for uranium to wean off a Russian supply. Now, details are kind of lacking on this, but I think people are misunderstanding, and we will see in the end when more details come out. But first of all, the key word here is domestic producers. That means United States producers. That does not mean Canadian producers, right? That does not mean Australia or anyone else. And it's also for enriched uranium. And so I think the takeaway here is pending further language that clarifies. If this is a literal statement, then there are a few equities that stand to gain from this, okay? And so that's A. B, the uranium market retail, right? You guys, right? I think a lot of people are overreacting to this. I think that this is not as bullish as people are pretending it is. And the reason is because if you're invested in uranium and you understand the uranium thesis in the first place, then this is not news. This is simply an expectation coming to fruition, right? I don't understand how something that's already an 11 out of 10 on bullishness gets information like this and it's somehow bullish. It doesn't make sense to me. This is not bullish. This is expected. So the idea that this is going to do anything really doesn't make sense to me, right? And how people are, reading this news and thinking, wow, this is great news for uranium. That's a testament to me that you didn't understand the thesis because you should have expected it, right? The further we go on down the timeline, the more we're going to come to a head on the supply and demand deficits. And the more we're going to see governments and, equities and utilities be forced into action. So these are the kinds of things you should be expecting, right? You should not be reacting to these things. It just doesn't make a whole lot of sense to me. I just fail to understand the broad receipt of this message. I think it's a testament to people just still being reactionary to news rather than understanding the underlying thesis that they're investing in the first place. And that's not to make a slight. It's just a reality check. Like you got to understand also that uranium's not a secret anymore, right? It was a contrarian play way back here in times past, but it's not necessarily a contrarian play anymore. Everybody knows about the thesis now. It's out in the wild. And so you're not the only guy who knows about it anymore. And that's A. B, considering you're not the only person that knows about it anymore, considering it's now becoming a popular trade, there's going to be swing traders, more and more and more swing traders in the market. And that adds to volatility, especially on big headline news like this, okay? So what do you do in markets as a swing trader? Well, you buy the rumor and what? You sell the news. I think this is what's happening here. It's very similar to what I talked about in my last video in the gold and silver market. You had even the slightest whisper, the slightest little hint that the Fed was going to pause, and then the silver and gold market exploded. These equities were up some 10, 20%, all right, in a single day. They just exploded, the entire sector. And it's a testament that I've been trying to point out that people cannot wait to get their money into these sectors. It's a testament, it's a confirmation that we're right about the thesis and everything we talk about on the channel. Is that people cannot wait to get their money into these sectors, which is why you need to always be accumulating down here like we've been talking about, all right? Because the day's going to come when they're going to explode and they're never coming back. I mean, never coming back, right? People just need to feel safe because after everything that's been going on in the broad market, people are scared. And so they're waiting for cues and signals to get back in. But believe me, they cannot wait to get back in. And so you have a headline like this, and then uranium just explodes to the upside, right? It's the same thing. You get 10%, 20% in some of these equities, 30%. I think Western Uranium Vanadium was up 30% or something. It's like, guys, this is a testament that we are correct, right? This is a testament that you need to be accumulating at these lower prices with confidence, right? The more oversold it is, the more you need to be buying. You cannot be scared out of this market. You just need to anticipate in advance that it probably will come down to these levels so that you have the confidence. I just keep pounding the table on these same points over and over and over to try to drill it in your head. This is what you have to understand. This is the way it's going to be. So don't react to news like this. because it doesn't even make sense. You should be invested in anticipation of the news in the first place, right? And so, things like this are going to happen, but they're probably not going to change the course of things, right? I mean, we still, I think, have to come down. I've been talking about this for weeks, and it probably will take weeks, right? Just like the bond market sell-off that we anticipated for so long took weeks, right? It took like 2 months before we come up here and finally touched it. And then the sell-off itself, right? The sell-off itself took weeks and weeks, months, right? We're still ongoing in this bear market in the broad sectors, right? It's not done either. We're coming down here. We're going to touch this. And I think the news we're starting to see, the whispers of the hotter than expected CPI print tomorrow, look, that's going to bear a lot of weight on what happens next. Because I think for my fundamental concept of what's going to happen, how this is going to play out, I don't think that's changed. I think fundamentally we're looking at the same outcome. You think about it like you go to a park or something, there's a bunch of trails, right? And that's the trailhead. And there might be, 4 or 5 paths to get to the same trailhead, right? But they all lead to the same place. I think, we might take a different trail, but we're coming to the same trailhead. We're going to end up at the same place, which is somewhere down here as a bare minimum test, right? We're looking for these February 2020 levels. I mean, that's just the reality of the situation, right? We're going to look for those. And then in our commodities like uranium, gold, silver, whatever it is, we're looking to fall all the way back down here to retest this trend line and the potential double bottom. I don't think that's a bad thing. I think it's a good thing. I think it's a healthy thing. And we have plenty of room to fall without it even taking us out of our bull channels. And I've been talking about this for weeks. I've been talking about it since way back here. I could see this coming. I think it's still going to play out. Could I be wrong? Yes. It might not happen. But I think on days like this, when you had these big jumps above like that, I think that was a key moment, if you hadn't already, to take advantage of the bounce and to reallocate. All right. I had already reallocated in here. I've been talking about it. So, it would have been nice to have sold up here instead of here. Right. But I already honored my word. I already honored my own strategy. Right. And so I am waiting to come back down, flush up with cash. And I am completely happy with my trade because remember, I am, 85%, 90% still invested with core positions I bought a long time ago. So I'm good to hold and ride out this volatility. But certainly you should use opportunities like this to reallocate and reassess yourself and just to prepare and hedge for any outcome. All right. Because even though we're going to end up here one day, in the short to medium term, I think, look, you get a hot print. You get a hot print on CPI. We're going to talk about what happens. First of all, we're threatening to come up here and double top on a bare minimum. I thought that we were going to top here. Maybe we don't. Maybe we break. I just want to point something out to you. For those who have been with me since the beginning, when we talked about making this move up here, let me tell you something. We break this, it's going to be this all over again. All right. The same volatility we went through when we came up here, everything we lived through for the last 2 months, you're going to get it again. You break this number, you break this double top, there's really nothing above you for a very, very long way. And I think that if and when that happens, that's it. That's what breaks the markets. I think whatever falls, whatever drops, whatever break we get, I think that will be potentially the capitulation low. So here's what I think. Here's how you play it. Nothing about the thesis, nothing about the strategy has changed. However, if CPI comes in hot, right, we get a bad number, the thing that will change is volatility and duration. So we're going to get to that same trailhead, that same outcome we've been talking about. It's just going to happen a lot faster. Okay, it's going to be a sharp sell-off, a sharp decrease. So instead of taking time, right, this bear market just beating everybody up, it'll probably get volatile again because the markets will start to break. And I think that's what you're looking for here. So tomorrow's number from the CPI is kind of the big thing to be looking at right now. I think depending on what that number is and to what degree it comes, it's going to dictate a lot of what happens in the markets over the next, honestly, 4-8 weeks. I mean, it's a big deal. It's a big number, and everybody's looking at it. And I think regardless of what we're looking at across any sector, it's the big one. And I think if we get this double bottom, if we get this retest of these areas that I'm looking at, like I've been talking about, you need to buy. you need to buy down here and do it with conviction and confidence, like we've been talking about, because this volatility, this period probably would be what breaks everything. And, people are going to be looking for their opportunity to get back in. And the Fed's really not going to have much of a choice to get back in. I think things already are kind of breaking, and everybody knows it. We just need that one last sell-off. This is going to give us the excuse to do it. The CPI print will probably give the Fed, it'll probably force them to raise even higher, at least one more time, maybe 75 basis points. This could very well be the catalyst that takes us lower. But regardless of which trail we take, whether it's a CPI beat, a CPI miss, it doesn't really matter. We're going to the same place. I think we're coming back here at bare minimum. So the only difference will be the speed of it, right? Let's say you get a beat. Let's say CPI is really good. Then you might have to fart around like this for a while, right? Before you come down here. If you get a miss, we're probably going to come straight down. So I think the outcome, and this is just broadly speaking, right? I'm just painting with a broad brush right now. You're coming to the same place. It's just the speed and violence to which you do it. Does that make sense? So you're going to play it the same no matter what. You should expect a sell-off. You should still be using bounces as an opportunity to reallocate resources, flush up with cash, do some swing trading. I don't think you should be 100% invested anyway. You should always have at least part of your portfolio that you can play with. Just take advantage of situations when you see them and when they arise. But just hold tight. And don't get shaken out, right? Just nothing's changed. This stuff is going to the moon. All of it is gold, silver, uranium. And I'll make a special video about gold and silver soon because I think they are becoming exceptionally undervalued here. I think they're probably a better value than uranium at these prices. I mean, a lot of these companies are coming down and testing. I mean, what business do they have being down here? We got to buy. And especially if you can get some kind of a sell-off to come back down any lower than this. I mean, this is just a last opportunity to take advantage of what the market's given you and the market's failure to understand the future of a sovereign debt crisis, a monetary crisis, just crisis generally speaking. I mean, we're in for some tough times where you can make a lot of money. You can certainly protect your wealth, and that's what we're here to do. So just hold tight. This is my hot take on what's going on, and I'll be busy. Again, I've been out of town, we've been on vacation, but I'll try to make an update after the CPI print to chime in on it. But I just want to give you guys something right now to go by looking for. So